Hey guys, welcome back. I hope you had a really great weekend. So, what happened last week? Last week we had a massive squeeze. We saw some really big moves, and the week before on Monday we did have VIX at 65, and that is a huge deal. That doesn't happen every day, and just because of the nature of the way options work, the prices of options were so high when we were at 65 that even bringing VIX back down to 30 or even 25 started this squeeze in motion, and we did get VIX down to under 15 by the end of the week. So from 65 the Monday before last week all the way down to 14. That truly does not happen every day. So really interesting week last week. We started right here in SPY, and we did start the week above the 35 EMA last week, which the week before we bounced back up, and it was a little bit of a struggle to get back above that level, but we ultimately closed the week before above the 35 EMA, and then we kept that upward momentum and we held above the 35 EMA for the entire week. We also had inflation data right here. This is Tuesday and Wednesday, and so Monday going into Tuesday we gapped up. We had PPI and CPI, and after that we had consumer spending Thursday going into Friday. So we had two up gaps last week, and we got back above the 50-day moving average, and we basically just plowed through every resistance level in the path. We got back to right where we were before we dropped, a little bit underneath that, but ultimately we V'd right back up to where we left off 2 weeks ago. And taking a look on the weekly time frame here, I don't know if you guys were here when I said that I had the Fibonacci retracement right here, and we had pulled back here to the 0.236 level, and that 35 EMA was right there, and I said we might see a bounce, and we definitely did. That was a huge rebound in just 2 weeks, and from that 35 EMA on the weekly time frame to where we closed in the S&P was almost 8%. So really huge. And taking it back to the 30-minute time frame, let's switch over to SPX. Same thing here. We closed last Friday above the 35 EMA, and then that 35 EMA pulled up above the 30-minute 200 moving average. You could see the momentum was down on that 30-minute 200 moving average, and after last week we are starting to see a curl back up. So momentum picking back up again. Right here we had inflation data, PPI and CPI, and then on Friday we had consumer spending. And I said this last week, but I do not believe that this upward move was based on economic data at all. There are a lot of cracks in the economic data. Personally, I think that this move was one giant gamma squeeze off of having VIX at 65 right here, and then just how quickly it got crushed back to 14. So be careful. The chart does say bullish here. We did have this bullish cross up, but from an economic standpoint and from a volume standpoint, I don't think that we are as strong as what last week's price action suggests. So let me know in the comments what you guys think. And SPY did close up on Friday, 0.22%. SPX closed up 0.2%. VIX down 2.69% on Friday. And Friday we did stay completely within the implied move. And taking a look at QQQ, we saw the same thing last week here. So we opened here on Monday, and that was above the 35 EMA. We stayed completely above that 35 EMA for the entire week. Monday was a very slow day. We did trade sideways leading into inflation data. We gapped up on Tuesday. and we gapped into this Amazon gap right here. So after Amazon earnings and the lower guidance, we gapped down. With inflation data, we gapped into that and pushed up through the top. So a little bit of that gap is still open and overlapping with the up gap, but we did push up and we saw that bullish cross right here, and we followed through on that all the way till the end of the week, and we did get up above the 30-minute 200 moving average. I think this is the 4-hour right here. Let me see. Yeah, 4-hour 200 moving average. We got above the 1 hour, and we made it all the way to the 50-day moving average, and we did not get above the 50-day moving average in the Nasdaq here. And you could see that right here, this green line, that was a previous resistance level right here at 474. And I'm going to zoom out just a little bit further, because before being a resistance, it was a support level right here. So previous support turned resistance. We are getting a little bit slower here and seeing signs of rejection at this level. So 474, be careful. That 50-day moving average is here as well. So QQQ did close pretty flat on Friday, up against that resistance, up 0.13%. VXN down 1.68%, and we did trade completely within the implied move on Friday. And then IWM, we saw the same thing over here. We did open the week pretty neutral, and Tuesday we did see that gap up. We had inflation data right here, and then we hit that 50-day moving average right here, dropped to the 35 EMA. So PPI and CPI data did not give IWM a huge boost, but consumer spending did, and we gapped up above the 50-day moving average. We also gapped above the previous week's down gap that we didn't fill completely. And then from there, we pushed up and we got up to the 1 hour 200 moving average. That is where we started seeing resistance. And we also had this resistance right here where we saw the 2 up gaps and the down gap. And that was from when we broke out above that long resistance level. So we broke up here and had an up gap and then an up gap. When we came back down, we gapped under. And that is where we started to slow down. We started to see resistance. And that 211 was that long standing resistance and support back here during the COVID era. We had it as a support. After we rallied, we consolidated along 211 as support, but once we broke down underneath in 2022, we saw that as resistance here, and then we got above that level and then dropped. And then on Friday, we got back above 211. So that will definitely be an important level in tomorrow's trading range. And IWM also had a big week on Friday. We did close up 0.26%. The Russell Volatility Index coming down to 22, down 0.544% on Friday. And we did stay completely within the implied move here. And the Dow, DIA, same thing. We opened, Monday was a pretty flat day. From where we opened to where we closed was really flat and underneath the 50-day moving average. And then Tuesday we did have PPI inflation data, and Wednesday we had CPI. So on Tuesday we gapped up above the 50-day moving average, which was resistance the previous week, and we pushed up and we closed out the previous week's down gap. And from there, we were off. We closed out the next resistance level. In fact, Thursday going into Friday, we gapped over this island top right here. So what could have been a battle zone, we gapped over overnight with consumer spending, and we pushed higher. And really, DIA got above most of the major resistance levels. We have one more right here at 412, but we got through this entire mess last week. And again, I don't think it had to do with economic data. I think it was just the nature of options. It is my opinion that this move was a temporary thing, but hopefully if you guys have been watching, you were prepared for all of this. DIA closed up 0.21%. And we actually closed outside of the implied move on the week here. So really big move. And this coming up week, we don't have a whole lot of economic data, but we do have Jackson Hole on Friday. So be aware of that. And let's just get to it. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and if you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you're notified every time I do post a new video. Leave me a comment if you have any questions at all. I do get back to all comments, and this is complicated stuff, so if you don't understand something, let me know and I'll try and explain it in another way. And if something I shared helped you make a really great trade or you learned something new, let me know by hitting that thank you button. Your support really means a lot to me. Alright then, so starting in SPY, tomorrow's implied move is between 551 and 558, and that is from options. And the 30-day average volatility is much wider. It's 543 to 565. And then Tuesday's implied move is 550 to 559. And tomorrow's implied move is much smaller than the 30-day average volatility. And that is an effect of having VIX at 65 2 Mondays ago. And then now we're back at 14. So this right here represents the moves that we've been seeing in the past 30 days. And this right here is showing us where options and VIX have the implied move at for tomorrow. And to the upside, the first level to look for is, and actually let's just start with where we are right now, because right here is a resistance. We closed at a known resistance. Right before Amazon earnings, right before we saw that really big drop, we were up here at just above 554. So you could see we closed 554.31, and right back here was that first resistance level. And actually I'm going to zoom out just a little bit more because we have two resistances basically off of all-time highs right here, 565.16. We were starting to see lower highs, and the next two lower highs are right here, and both of those are in the trading range tomorrow. And then so the first one is right where we closed last week, and then the next one is just a little bit above that, and that is at 556.50. So round that how you need to. I'm going to say it's 557. And then the top of the implied move is at 558. The top of the implied move on Tuesday's contract is 559. And above that, we do have the island top gap that is off of all-time highs right here. So right before we made these all-time highs, we gapped up, and then we gapped down, and after we gapped down we dropped a lot. But that is the island top, and the bottom of that gap is at 560. The top of that gap is at 564. The top of the trading range for tomorrow is at 565, and previous all-time highs are at 565.16. So if you can believe it, all-time highs are right there above our trading range. And then to the downside, we do have the 35 EMA. Always know where your 35 EMA is. Tomorrow it is actually underneath the implied move. Let me turn that to the right color. And so the 35 EMA is underneath the implied move. So if you've been watching this channel for any length of time, you'll know that when that happens, there does tend to be a little bit of a pull, either down or to stay flat. So on Friday, we did have that 35 EMA underneath the implied move to start the day, and we did have a relatively flat day overall. So again today, you could see the bottom of the implied move is at 551, And that 35 EMA right now is sitting right at 550.27. So it is underneath, and that could give us a little pull down. And then the implied move for tomorrow is 551 if we do break that 35 EMA. The implied move on Tuesday's contract is 550, and then underneath all of that, we have the up gap from last Friday, and within that gap, we have the 50-day moving average, and we also have the 1 hour 200 moving average. I think that's the 1 hour. Yes, the 1 hour 200 moving average, and the momentum there is still down. Both the 50-day moving average and the 1 hour 200 moving average, the momentum is relatively flat there. And then the bottom of that gap is at 543. And underneath all of that, since we are on the 30-minute time frame, we could see this 30-minute 200 moving average. And I'm going to zoom back just a little bit because this is an important level, and this is all-time highs. And once we got underneath 35 EMA, and really once this 35 EMA crossed underneath the 30-minute 200 moving average, this level right here was a resistance. So we dropped down, 30-minute 200 moving average, resistance, came back down, swung up, 30-minute 200 moving average was resistance. Then we had that big drop, and now we're back up. So we definitely could see a pullback down to that level, and especially because we are so overbought here on this time frame. So definitely an interesting trading range over here for tomorrow. So that is SPY. Then taking it over to SPX, and the implied move in SPX tomorrow is actually really small. It's between 55.25 and 55.85, and let me see why that is here in just a second. So the implied move for tomorrow based on options is just 0.53%, and then the 30-day average volatility is between 54.55 and 56.55, and that is 1.78%. And then on Tuesday's contract, the implied move from options is between 55.10 and 5600. And to the upside, the very first level to look for is going to be that resistance right here in SPY. If you're looking where the body ends right here, then we basically close just at that level. But if you're looking at the wick, it is just a little bit above us right here. So that is at 55.66. And then let me put in this other one. I don't have this in. This is that next resistance level. And this is off of all-time highs where we started to see lower highs. So right here, all-time highs is at 56.69, and then we dropped, and then we had a resistance right here, and then we dropped again, and we saw a lower high right here. So we are basically right at that level, and then right above that, we have that second one. And that second resistance actually lines up right with the top of the implied move, so 55.85. And then we have the top of the implied move on Tuesday's contract is 5600. And lately, because of the volatility, I have been leaning into the next day strike, which for tomorrow, 0.74% sounds a little bit better to me than the 0.53, at least to the upside. And then outside of those implied moves, the next level is going to be this island top. So let me get recentered here. So off of all-time highs right here, the day before we saw a gap up and then a push to make those all-time highs. And then from there we gap down. So we have both of those gaps right here. That is an island top gap, and that is at the top of our trading range tomorrow. And in SPY, we had the all-time highs right aligned with that 30-day average volatility, but in SPX, it's a little bit higher. So all-time highs are outside of our trading range in SPX. And then to the downside, we do have the 35 EMA, which we did trade completely above last week. And as of right now, it is just outside of our implied move. So again, that does tend to signal a more flat or a down day. It doesn't have to. I've definitely seen times where that is not true, but it does tend to happen more often than not. So we are just outside right here, and then the bottom of the implied move is 55.25. So if we do break that, look to 55.25 next, and then 55.10 on Tuesday's contract. And then underneath all of that, we do have this up gap from last Friday. This was right after inflation data here, and then right before Friday. And I'm sorry, this was inflation data Tuesday and Wednesday. So this up gap right here was actually going into Thursday. So we have that gap underneath us, and then that also has the 50-day moving average, which is a really big level, and then the 1 hour 200 moving average. Between those two moving averages, the momentum is pretty flat. So if we do get down into this gap, we might muddle around a little bit in here. And then underneath all of that, we have the 30-minute 200 moving average. That big squeeze that we had last week went ahead and it turned that 30-minute 200 moving average. It takes a pretty big move to do that, and we did have a pretty big weekly candle. So you could see the weeks before that, the momentum there was down, and last week we curled it back up. So that is a level that could also slow us down if we do find ourselves down that way later in the week. So that is SPX. The only other thing I see, and I did already mention this in SPY, is that we are extremely overbought here. So keep an eye on Stupid Willie right here, and then taking it over to QQQ. The implied move over here is between 470 and 480, and that is from options. And the 30-day average volatility is much wider. It is between 459 and 490. So let's take a look at that really quickly. The implied move is 0.9%, and the 30-day average volatility is 3.16%. So huge difference. The two numbers are not agreeing at all, and anything in this 30-day average volatility is possible. If we do start to sell off here because we are at resistance and VXN might spike, then the lower levels are most definitely possible. But let's take it one level at a time here. And we are in this gap right here, and you can see an up gap in the middle here and a down gap, and then we have a support and resistance level. I'll zoom out to show all of this in just a second. And then within this gap here, which we did push into a little bit on Friday, we do have the top of the implied move, which is 480, and then right at the top of the gap is 481, and that is on Tuesday's contract. So for the next 2 days, the implied move is just a bunch of resistance. So zooming that out, I'm going to take it to the 1 hour time frame here. That will hopefully show it a little bit better. So right here, we have this up gap and then this down gap. Both of those gaps are right here to the upside, and then the green line right here, that is a previous support. You could see it bounce right here, and then it bounced right here. But once we gapped under that, and then we swung back up, that was a resistance, a pretty clear resistance, and definitely a pivot level to watch. And then above that, above the implied move for the next 2 days, we have this resistance level right here. That is at 484. And then at the very top of our trading range for tomorrow, we do have this down gap, which was just a little bit off of all-time highs. And that is where we started slipping, and then we dropped, pulled up to this resistance, and then gap back down. So this gap right here is the one that's within the implied move, and then we have that other one at the very top of the trading range. So this is the 1 hour time frame. I haven't pulled this up in SPY, but this is what Stupid Willie looks like here. Has not actually crossed down yet, but looks extremely overbought. And then taking it back to the 30-minute time frame to go to the downside here, we do have the 35 EMA, and that is, it's not actually underneath our implied move, but it's right there at the corner. And then if we do break that level, then the bottom of the implied move is at 470 and 469 on Tuesday's contract. Underneath that, we do have that 1 hour 200 moving average, and the momentum there is down. So that gives us a high probability of getting pulled down. And then underneath that, we do have the up gap from last Wednesday going into Thursday. So this was after the inflation data. We had PPI Tuesday, CPI on Wednesday, then we gapped up after that. And right here we had consumer spending. And then the bottom of that gap is at 462. Remember, the bottom of bull gaps tend to be support levels, even if it's for an intraday bounce. And then underneath all of that, we do have the 4 hour 200 moving average and that 30-minute 200 moving average that also turned. We did see that as a resistance basically since all-time highs, and we had such a big squeeze off of that 35 EMA that we ended up turning that 30-minute 200 moving average. And again, we do return to the 30-minute 200 moving average or pretty close to it often. So you can see here we dropped and then we pulled back up, dropped again, pulled back up, and then right here we got above it. There is a very big possibility that we at least come back and get pretty close to it. So that is QQQ, and then taking it over to IWM. And the implied move in IWM is between 210 and 214, and that is from options. And the 30-day average volatility is quite a bit wider, 206 to 219. So 1.13% implied move and 3% from the 30-day average volatility. And then on Tuesday's contract, 209 to 216, that's the implied move. And to the upside, we do have the 1 hour 200 moving average, and then this down gap and up gap combo. So we did have a really interesting island top. So after we broke up above that big 211 level, we did actually gap up. So here's 211 right here, and we gapped up, and that gap got filled last week on Friday, and then we pushed up a little bit higher, but this gap right here pushed us back down. So originally we had 2 up gaps and a down gap, and now to the upside tomorrow we did have that other one filled, so we have 1 up gap and a really big down gap. So that is basically taking up the entire implied move for the next 2 days. And that 1 hour 200 moving average is also running through it. And you could see that 1 hour 200 moving average was resistance here and then resistance here. And actually Thursday and Friday were pretty funny because the 1 hour 200 moving average was resistance, and then that 30-minute 200 moving average was support. And the reason that's funny is that the momentum is reversed. The 30-minute is pointing down and the 1 hour is pointing up, and they just took reverse rolls. But so we have that island top here to the upside. So the top of the next bull gap, that is at 214.5. So if we're going to see resistance from that bull gap, it'll be there. And that actually makes me question, yep, the top of the implied move is actually at 215. So 215 there. So if we get above the top of this up gap right here, then 215 is the top of the implied move for tomorrow. 216 is the top of the implied move on Tuesday's contract. The top of that big bear gap is just above 216 at 216.25. So that is the upside. And then to the downside, we do have that 30-minute 200 moving average, and that 35 EMA is actually at a very critical level here, because if we get rejected, then we'll see more downside, and then this will turn out to be a bull trap right here. But if this 35 EMA crosses up then that will be a bullish cross up. And if that can hold, if we can see follow through there, then we'll return to being bullish on this time frame. So right here, big level to keep an eye on. So that 30-minute 200 moving average crossing down, and it takes us right to the bottom of the implied move at 210. And then 209 on Tuesday's contract. 50-day moving average is in this gap right here underneath the implied move. So to both sides we have gaps, and on the downside it is the rest of this down gap right here. That was from 2 Mondays ago when we had that really big down gap, and then we didn't quite close out that little piece right there. So we have that down gap right here, right above that 50-day moving average, and then we have this up gap right here. And this up gap was from after CPI and PPI. This up gap was going into consumer spending. So to both sides, there is a lot to look for. This is a very messy trading range, and we're going to break out one way or the other. Either we break down or we break out. There's 2 island gaps in tomorrow's trading range. That does not happen every day. That is definitely a bit weird. All right, and then the Dow Jones. This is also a really weird trading range over here, because what we have is the implied move for the week. Now, DIA, we only have weekly options, weekly contracts. We don't have dailies like in everything else. So this is the implied move for the entire week. But what makes this really weird is that the 30-day average volatility is basically the same size as the implied move for the whole week. So clearly volatility got crushed with the implied move, and then that 30-day average is taking up the entire trading range. So to the upside, now remember, we got above all previous resistances. So right now we don't have any resistance to the upside in DIA. So the first resistance is actually lined up right with just underneath the top of the implied move for the week, and that's going to be right here. And let me actually just go ahead and put that in, and that is right at 411. Let me extend that out. There you go. So the only resistance level is right here at the top of the implied move, just a little bit underneath. So that is at 411.90. Let's call that 412. And then 413 is the top of the trading range for tomorrow and the implied move on the week. Now, will we get to that level? I personally don't think so. We're extremely overbought here. And Stupid Willie did actually cross down on Friday. And then that takes us to the downside. The 35 EMA is underneath us, and that is definitely the first level to look for, because if we don't find support on that level, then the next level underneath is going to be this island top right here. And this was an up gap and a down gap, and actually we did fill the up gap, so we just have this bear gap right here. And because we gapped completely over this bear gap, there is a possibility that this bear gap will be even more vicious. So we did fill this up gap, but then we have this up gap right here. So this is still going to be a battle zone. 1 hour 200 moving average is in there, and also the 30-minute 200 moving average. And you could see they are starting to point up. So momentum is coming back to the upside. 50-day moving average is pointing up. So if we get down here, chances are we do slow down, chop around a little bit, and see if we can turn those moving averages further. This level right here is where we need to find support. So it is underneath the implied move. 30-minute 200 moving average is around 398, 399 level, and then 50-day moving average 396. This right here is what we need to hold. So high probability that we pull back tomorrow just because we're so overbought. But when we drop, this right here is where we need to keep an eye on. So there you have it, guys. Hopefully now you feel pretty confident to tackle the next 2 days. Have fun, trade safe, make sure you take profits when you